All right, traders, I am back again with another video, and in this video I want to take a little time to look at one of the aspects, one of the theories of Ichimoku that most traders don't use, most traders don't know about, and most traders don't really even understand. And that's going to be the three theories that we really understand and look at are the time, the wave, the relationship between time and wave, which is going to be time and wave pretty much, and then your value range observation, okay? Most traders here in the Western Hemisphere don't even know about those theories, all right? Don't even know that those theories exist with Ichimoku. And then some may know about it, but they don't use it because it's kind of hard to learn it if you don't have someone to teach it to you, because there's nowhere really where it's taught or shown a lot of. So I'm going to break it down for you just a little bit. We're going to touch into it. All right, so you know that Ichimoku was developed by a Japanese newspaper worker named Gochi Hisada. He worked at the Mayako newspaper, and he was also known as Sanjin Ichimoku. Okay, so basically Ichimoku is a systematic theory of financing. So what that means is basically instead of just taking the asset and looking at that to do your analysis, you use more things like your trend lines, your waves, your support and resistance, your price targets, and so forth. All right, so that's how we say that it's a systematic technique of trading. And it's pretty much the same as Gann. So Gann's theory is pretty much the same, because Gann believed also just as much as Ichimoku, believed that the time is the most important element and that time balances out the market. So price was not the most important thing. When you ask Ichimoku traders in Japan, they will not tell you that price is the most important thing. They will tell you that time is the most important thing. And we're not going to go over the time value today. All right. So we'll talk about the wave values, your wave values today. But also, when you're using Ichimoku and you're using those concepts, the time is going to determine your cycles. So you got cycles that develop, and you see those cycles over a period of time. So then you start to see the same patterns. So that pattern develops over a certain period of time. So with Ichimoku, when the market changes direction, so you can see there's basically where goes from the bottom to the top, back to the bottom, and changes direction, goes back to the top, changes direction. That's going to be called basically hinkabi. So that's going to be the day the market turns, or the day the market accelerates or changes. Okay, so that's what it's going to be basically determining. And so those numbers, when we look at those numbers, at those movements, we use numbers to determine those, and it's going to be your basic numbers, which is going to be called your Kihun Suchi. All right, that's your basic numbers, and then your Tatu Suchi is going to be your equality in numbers. So those basic numbers start becoming equal numbers, and you'll see what they call Taro Suchi. Okay, but that's getting a little bit deeper and not really explaining these things to you. So just telling you these things is not going to help you. So let's talk about something that really could help you a little bit more right now without knowing those aspects of Ichimoku. So when we look at the market moves in waves. So Ichimoku has its wave concept, and I'm going to draw some waves here. All right, so it's much, like I said, pretty much like Elliott wave, right? So we'll use the red. So I'm going to draw some little waves here so you could see. The market goes higher, goes lower. Then we could go one big wave here, a wave down, another wave up. So let's go back. I'm going to erase this. We're going to go just from this leg. So when we look at this leg, in Ichimoku, that will be one I wave. If we add another I wave to that, as you could see there, and I'm not too neat, so you got an I wave up and an I wave down. Those two waves put together make a V wave. And then when you add another I wave back up, that's your N wave. What we're looking for, basically, we're going to be understanding is basically this N wave here, because the market moves in that pattern throughout. And when it doesn't move in that pattern, it forms a P wave, which still moves in N waves, but it forms one big P wave or a Y wave. And I'm not going to get into those two waves. Those waves are pretty much fluctuation and we're not going to get into that right now, and I'm not going to get even much deeper into the waves here. I just want you to see, because these waves, really, we're looking at these N waves. All right, we're not really just concerned with an I wave. We want to know more than that. We're not just concerned with this wave. All right, we want to know more than that, because now when you look at that wave, what do you have? You have a 1, a 2, and a 3 when you just look at that, right? So everybody, a lot of people here probably do know about your 1, 2, 3 trading concept, okay? But then when we look at this whole thing here, and then we break it down, we have 1, 2, 3, and 4. So which would be A, B. So we, even with the 1, 2, 3, you could say we have a A, B, C, and then we have a D. So a lot of times A, B, C, and D, here's what you're going to see. It's going to be this A and B leg is equal to this C and D leg. So a lot of times these legs are going to be the same length. When we start talking about Ichimoku time value and time theory, then that's going to be important aspects for us. So we'll look at time and find these values and find where we might see Hinka B. All right, so Hinka B is just the change of the direction of the market. All right, but I want to show you what this is. Basically what we're going to be looking for is the value. So when we look for a trade, basically if we were looking at a trade, so say we looked at this, and then we looked at this, and then we wanted to enter a trade here, where would our target be? That's what we're going to talk about, where our target would be from here. Where do we find that it would be that target? But this is a simple one because we're kind of in a range here. All right, so when we're in that range, you kind of know where you may shoot for. All right, but when the market's trending, then what? All right, so we're going to look at the trending market, and we're going to find where our value is and how we're going to enter into the trade, and then where our target is going to be. All right, so let's look at that. Let's move this ahead a little bit so we could start to see this. Okay, so still I probably wouldn't know for sure here, but now I'd start to understand, because I have a few things that develop here. So what I would start looking at, right, so now I'm going to start looking at my trade. When we look at trades, there's a couple trading opportunities here that we could have looked at, and I'm not going to get deep into those because I cover mostly all the trade setups and entries on my course. But one trade that we definitely look at, everyone looks pretty much at it, TK crossover here, which is your Tenkan-sen, the green line, and your Kijun-sen, the blue line. When that crosses above Kijun-sen, when you get a TK crossover, that's bullish. That's a bullish trade setup. All right. So when you have that setup, you also see that price pulled back, right? And then you look at the leg here. Now I could call this one leg down, but I want to see where now the market appears to be going to the upside, right? So since the market's going into the upside, I want to start figuring out my values. So most traders understand this concept, 1, 2, and this would be my 3 now. All right, and then we would look for our target 4, or else a lot of traders may understand it more so like I just said earlier, which would be my A, all right, and my B, and then this would be my C point. So now I want to find my D point. Well, basically Ichimoku has the values where your targets would be, and they're going to be, I basically concentrate on 3 of them. My V value, my E value, and my N value. And there's also an NT value, and then there's also values on top of that that I feel you don't have to get that much deeper into. You just basically understand those three values, and if you want to add your NT value in there, you could. So you have four values that you shoot for, that you look for the market to move to, and those values are where you're going to look for your target. So when people get into a trader gets into a trade down here anywhere at the C point, you know, because you took a TK crossover trade here, you're looking at that C point. Now where's your target? Quite naturally, I always want to get past this level. All right, so that's an easy one. But then where do we go to next? I mean, do we just go to the cloud? Do we go to this upper level here? Do we go to the lower bottom here? Where do we go for next? All right, well, if you're looking at the A, B, C, D, it's going to be a 1-to-1 ratio, which means this A and B leg is going to be the same as your C and D leg. So add this leg, A, B, equals, and now to find your D leg, whatever length this AB is, add it to your CD, and that's going to be your N value with Ichimoku. All right, and as I told you, there's other values which are going to be your E value. All right, your V value and your NT value, and we're not even going to talk about those values or how to get to those values, because we just need to understand this value first. And all this value is a 1-to-1 ratio. So I do this with my tool. I use my Fibonacci expansion tool, and it'll help me to find my value if I put it on the chart, right? So let's put it on the chart, and then let's see where we go. So I'll put my Fib expansion tool on the chart. I already have it set for a 1-to-1 value. So you go to your high, from your low to your high, and then down to your pullback point. So you go from your A, your B, your C, and it's calculating for you your D value. My D value is going to be Ichimoku N value, wave value. All right, so when the market moves up, we're going to expect it to get to that point. So these lines don't extend for some reason, so let's extend this, because I don't believe the market's going to come straight up like that. All right, because it would have to go straight up here, and it probably won't do that. So let's shoot for this target here. You could see it right there, 6488. That's going to be our N value. All right, so again, our N value. So that N value again is a 1-to-1 ratio. So if you got into a trade here, that's your target. All right. Then this was a Friday, it looks like, and then the market gapped up. So we're looking good. We're happy about our trade now. We had resistance here with the cloud, but it's a thin cloud, so we should get through that. And you know what else helped us? You guys got to start looking at this. But Ichimoku, when you see your Kijinsen, your Chiku span break above Tenkan-sen and Kijinsen and the price, there's nothing to hinder us pretty much, right? So we see price pull back and then continue a little bit higher, and now it's having a hard time breaking this level here. Most traders are out of the market here, and I don't blame you. You made profit, all right? But once you start to really understand the market and you start to really understand how to use Ichimoku and look at those targets, then maybe you stay in. And there's some other aspects that will keep you in the trade too. All right, because to me, you didn't close below your Kijinsen level. So if you didn't close below Kijinsen, then I wouldn't close out my trades yet. But then you could lose some profit also. So you have to look at it in different ways. Now it's much easier if you're trading with more than just one lot, because if you're trading with one lot, then you probably want to take profit. But if you're trading with a couple lots, 5 lots or more, somewhere in there, even 4 lots, you could take half and then let the other half run, or you could take three lot profit and let 2 run and see if you can hit your target. All right, but if you're trading with one lot, it's risky because you could lose it all. So then you probably want to take your target, your profit, where you see you made pretty good, and the looks like the market's sideways here. Now you also see we're looking at Chiku span here, having trouble with the cloud here. So we need to get through that cloud there, and we have a nice breakthrough of the cloud here. And then the market continues moving. The market pulls back. Still hasn't closed below Kijinsen here. And then we hit our target. So if we hit our target, we can take our profit, right? That would be our profit right there. So that's what the market did, hit right smack dab on our target. You could see what it did. Boom. So that's the 1-to-1 ratio. A lot of traders probably know about that level, about that 1-to-1 ratio, but never knew that it was an end value of Ichimoku. Well, that's what it is, an end value. Okay. So let's see if we could look at a few other opportunities and then we'll close it out. But that's pretty much easy there. It's pretty basic for you. You know, that's nothing major. So you already know one value of Ichimoku, but you want to understand and know how to use those values and how to get into your trades and everything else. So it's a little bit more than just that value. You want to know everything else. Okay, so when we look at time value, we're going to look at where the market changes. Okay, so that's going to be Hinka B, and maybe we have a change here, a change there, change here. We're going to start to see those time values and see the periods between that, and that will help you to make kind of a determination on what you want to do with your trade. And if your time value and your wave value and your value range observation all line up pretty much at a support and resistance level, now you have strength, really strong strength, to help you to determine what you want to do with your trade, be it a short trade or a long trade or take profit or whatever it may be. All right, let's see if we can look at a couple more opportunities and then we'll close it out. Okay, so when I'm looking at this chart here, okay, I basically don't really want to enter a trade yet because look at where Chico span is. It's sitting inside of this price area here, and I really have market fluctuation. But also when I start to look at this is starting to develop a P wave that we see in Ichimoku, and I'm not going to really get into that right now. I want to still look at our 1-to-1 ratio. All right, so when we're looking at this and we see what the market's doing, now we're looking at Chico span. Now Chico span has broken above your Tenkan-sen and Kijun-sen, just slightly breaking above, but we need to get above this price level here. So I'm not really looking to take a trade yet, and I don't see the market making moves that would warrant me getting into any type of a trade yet. All right, and then you could see we're still inside that price realm here. All right, and then we get a breakout down here. Now this breakout here, I probably would have taken that breakout, but the thing that would have scared me is Chico span. Right, because you want to pay attention to that. So with Chico span being smack dab in the middle here, it's kind of hard. Okay, so if you look at that, this is the market range. And so I would probably think the market would come back down to this level here because I would be looking at a range trade. So if I took this trade, I'm worried about Chico span, but I also know that I'm in a range. So let's see here. We would have got stopped out. That trade wouldn't have worked. Okay, so the range trade would have stopped. It looks like the range is becoming violated here as we see the market attempting to break through that level. So we didn't pull back. So when you're looking at a range, this is also a good thing to know. When you're looking at trading a range, a lot of times that market will pull back half of the range and then go back the opposite way. So let's say the market pulls back half the range, which would be pretty much in this area somewhere, right? So Kijun-sen is going to be pretty much the middle of the range. You can see that. So another good thing is when you see market come down to Kijun-sen, you know, and it violates but comes back above and never goes back to the lower level, a lot of times that's going to signify a possible breakout to the upside or vice versa, a break back to the downside. So look at the market only moving half of that range and then breaking above that level. So that's just a little something that we wanted to throw in there, but we're more so looking at our values. So we're not in a trade yet because we just got stopped out going trading a range trade. All right, so let's get back to trading Ichimoku. Okay, so we got a Kumo breakout here. I probably would have liked this breakout here because you got a lot of strength here. But now when I trade a breakout, you got to have a big stop loss. So a lot of times I'm going to be at least below the Kijun-sen. And then I also use fractal levels to trade below. I want to stay below the fractal level, but also, you know, there's different types of ways you could trade this. So let's say we take this trade, or matter of fact, let's say we don't take this trade, because a lot of traders are going to be afraid to take this trade because they're going to talk themselves out of this trade because of the market move so high. And you do have resistance here with Chico span. You can see Chico span has a lot of this resistance to get through this cloud. So let's just follow price, see what we get here. And the price didn't really do much, and you did get a little pullback here. Now with that pullback there, And now I'm looking to get into a trade because we pulled back, right? But I didn't get a real good signal to enter the market yet. And Chiku span never got above this level here, so there was a lot of resistance. All right, so we're getting deeper, but still staying above your Kijinsen here. And remember, if I told you took this breakout trade, you'd be in a drawdown right now, and most traders would have gotten out, and it would be hard to trust this, and I wouldn't blame you. All right, but now we're looking to get into the market. We got to bounce off of your Kijinsen down here. So the market didn't violate Kijinsen, and then we get Chiku span getting above price. So now we're outside of the cloud here, and we could enter into the market. So when we enter into the market, we want to know where our target is. So again, we're going to look at this market, and we got to find out the market moves. So I'm going to show you just really, you could see, again, I'm talking about how this market moves, right? Even when we're in this fluctuation, and this is pretty much looking like a P wave here, but I'm going to draw this wave out. I'm going to draw this out. And you could see pretty much moves and ends. All right, so now you could see how it moves and ends, and I'm kind of sloppy there. So let's look at this last leg. All right, so we have that V that I told you about, and we're looking for that N. All right, so where would our target be? Well, naturally, we want to get past that point naturally. So we have this 1, 2, 3, or else we have it what you would call A, B, C, and then our D leg, which would be 1 to 1, which would be the same length of this leg added it on from here. This is your equal sign, and then you add that leg on here, and that's somewhere your target should be the same length of this move here, because the market has a mind and understands what's going on also. So I want that target, so I'm going to use my fib tool again because it'll make it just simpler. But I could measure this leg and say it's 100 or whatever, how many pips it is, and then add it from here to there, and that will give me the same target as what I'm getting ready to do here. But I'm going to put the fib tool here because it's much easier to show you that way. So I put it there. So no matter where I get into the market, I could have gotten into the market here on the breakout. I could have got in here off of the bounce of the cloud, or I could have got in down here. So wherever I got into this trade, and we haven't gone below Kijinsen, I'm still looking for the target. No matter if I got in here, no matter if I got in here, no matter if I got in this area. All right, because there's 3 trades in this area. So we could have got one of these trades at least, right? And if we got one of them, our target is still going to be the same, because now this is where the leg developed. So now we want to see if we could get to that point. A lot of traders would have dropped out here. After you made this profit, you would have dropped out. Again, yes, I don't blame you if you're trading with one lot, but if you're trading with more than one lots, you take some of your profit. So you may want to get through that point that I talk about. You may want to get through this point here, which is your B point. So you have A, B, and then you have your C here. We got through the B level. All right. So we'll delete that. And then we never close below Kijinsen. And it's really hard to follow Kijinsen, guys. I understand that, because it's the gap distance. That's why if you're trading with more than one lot, you can find and use that target. Okay, so let's see. This is our 1-to-1 ratio. Let's put a line there because it doesn't extend. All right, and if we put a line there, guys, it's pretty much smack dab on that line. Look at that. So that's where you want to take your profit. All right, so if you don't take your profit there, well, then now you're closing below Kijinsen. All right, you got your 1-to-1 ratio. So let's look at one more opportunity maybe here. All right, so let's look at one more, see what we got. All right, traders, so let's continue to look at maybe 1 or 2 more opportunities here and see what this market is looking like. Okay, so again, we're going to want to look at our waves, but again, we could break this down into big waves and smaller waves. So if I'm looking at these waves, you could see how the market moves. All right, you could see this pretty much moves in waves. and pretty much like Elliott wave, but we don't have to do as much calculating and stuff. Okay, so maybe Elliott wave, this will be our one leg up here, one, and I'm not a big Elliott wave guy. Two, then this could be three maybe up top here, and then we pull back to four here. Alright, and Ichimoku is going to always get you in the end of that third wave. Most of the time it will be on a Kumo breakout, and that's how you would catch that third wave. And the third wave is usually the biggest, most productive wave of Elliott wave. But when we talk about Ichimoku, basically we're just worrying about, we're not really worried about 1, 2, 3, 4, and 5. We're worried about 1, 2, and 3. Alright, and that's it. Now you know a little bit about the waves, okay, but you still have to understand the time analysis and also the our value observation theory. So with that, let's see if we have any more opportunities here. So when I'm looking at Ichimoku, I would start to look at weakness here, because Chiku span is below this price. We got a TK crossover that's bearish, but we have support here. We have a lot of support here with the cloud, okay, thick cloud too, so we need to get through that. So this, when I see that, I don't want to overthink stuff, so I might think that this is what I'm looking at here. So if I draw it on a bigger scale, this could be my part of my wave. And how far would my pullback go? Who knows? We'd have to see, and then we'd be looking at N, right? It could be something like that. So that would be on a bigger term, on a larger term, but we're not going to go that deep and that big. All right, so we just want to look at basically where we are now and just take part by part. All right, so I'd be kind of worried about the strength to the upside here, and you could see here we don't have a crossover, and also this is still a lot of support. Until the market gets through there, I'm still thinking about trading to the upside. Now it is showing weakness, but that weakness could be just this sideways movement. All right, so therefore we may not see any more down move, but we have to pay attention to the market and see, let the market tell us. Okay, so let's see what we would do here, and let's see for some opportunities to look at what we were saying. So this again would show me, this would start to really make me think about downward movement here, and who knows how far down, because we do have a lot of support though. Then now the market did not go below that level, so I'm still thinking, still might be looking that this is still strong support here, even though we got a TK crossover, we're below this point. We're starting to develop our twist. I definitely would probably start thinking more to the downside here, but then the market breaks out. All right, so now I'm going to trade it as it's worth. Then we get a big pullback. That major pullback, and this looks like news, and pretty much you see we hit right on support with a TK crossover that's bullish. So the market's trying to give me some bullish signals here, and we're inside this range level here though. So now we're inside the cloud, and there's still no trade opportunity for me. But then we get a Kumo breakout right here. Nice Kumo breakout. All right, so I would start to mark this level, because what I'm looking at here would be, and we do have it right now. A lot of times I want to get that fractal to confirm this C. All right, so what I'm looking at now would be this. I have this leg right now. Then we want to see where the target is, somewhere in that area, right? So I do have what some traders would call a 1, 2, 3 pattern. All right, or else I'm looking for my A, right, my B, C, and then my D. That's going to be my target. All right, so now I'm entering this trade here in this area. All right, because I got a Kumo breakout, so we enter this trade. So if we enter that trade, we need to find our target. Let's go 1 to 1 just to find the target. All right, so 1 to 1 is going to be our N value, and our N value is Ichimoku N value, which we're going to put here with our fib tool. Now the process is trying to see these as it happens, okay, and it's not that hard. once you train your eye to see this stuff. And a lot of traders now might not be able to see it, but when you train your eye to see this, you will start to really understand it and see it, because all it is a 1 2 3 pattern, and then you look for your target, and you got 1 2 3 patterns happening all over the chart. All right, you have little ones, small ones, big ones, giant ones, huge ones, smaller ones, whatever. Okay, so we have a Kumo breakout here. I'm entering the trade. I want to find my target, and definitely look at Chiku spans above price. We're going to see the move to the upside. With Chiku span getting above price, we have more confirmation. Everything is still now bullish. All right, and there's our 1-to-1 ratio level right there for our end target. We hit right on our end target, and we should have had our profit target set there, and we got it. All right, so you could see that happen right to the bone. So even if you don't understand what I'm talking about, the end pattern, I mean, because it's so easy to see, maybe you understand the 1 2 3, because a lot of traders do know that. So now we're going to just continue to look for that on our chart, right? So we want to look to get into a trade, see which way the market's going to take us, to the upside, to the downside, or wherever. So you just look for that pattern, and then you look to trade. So now I'm not sure where the market's going yet, but I got a big bounce here. I got a big bounce off of my Tenkan-sen level. All right, and you can see I'm starting to make lower fractals. So my fractals are lower. A lot of traders will call this you would look at this and say that this is a head and shoulders, right? All right, so I'm not going to get into that stuff because I really don't pay much attention to it, but you could look at it and see that this might be a head and shoulders that traders look for. And also the value in Ichimoku, we look for these same things, but not called a head and shoulders here. So that could be something that we look at. So if I'm looking at that, and I'm looking at my TK crossover just happened, which is bearish, I'm in this trade to the downside, right? We had a crossover here that was bullish. Price was far from the crossover, got a big pullback. When you're far from that crossover, I don't take those crossover trades. The price is usually going to pull back when it's that far away. Here we were smack dab at the crossover. You have to take that trade because your risk is minimum. All right, because with that, you only have to put your stop loss a little bit above the Kijinsen level, because we expect this level to hold. Okay, so with that, you could see now we have, if I'm looking at this whole thing, we'll see what we have here. Let's go. So when we looked at this area here again, we could trade a couple different things. There's a couple trades here. You got the TK crossover, you got a bearish engulfing. So we want to take this trade. So we're going to find where our target is. So where we're looking at this, all right, here's how we would be looking at this. This is your A up here, B, C, and we need D. All right. Or else you could call it a 1 2 3, 1 2 3, and then you look for your target. All right, now we call this basically we call this SID, which is a SID, because there's one guy in our community, all he kept looking for was a 1 2 3, and his name was Sid. So instead of calling it a 1 2 3, I said we're looking for a SID, a SID, because that is all he looks for. And he was like, I see a 1 2 3, I see a SID, blah blah blah. So therefore, that's why I always call it a SID now. That's just a little inside community thing there. But let's see what this trade could do, because we now have a bearish trade. The past few we looked at were bullish trades. I'm still worried about getting through this point here, and you could see we're closer to that point, but we have a thin cloud here, not super thick. We flattened out, which would let me think that that's going to be support. I would probably definitely shoot for a target there, at least just to start out with, and then I would want to get through that target. The market's trying to show me some downwards momentum to the downside. Maybe we didn't get this crossover yet, but we got a rollover here. All right, because you're going to see that crossover developing in the market could drop. The Chiku span is still above the price, but we're going off of this crossover. We got minimum risk, so we're going to take this trade. And then let's see where our target is. So in order to find our target, we have to put our fib tool back in there. So let's throw the fib tool in here, find our target, and then I'll get you guys out of here. Let's make some profit and let's go home. Alright, so that would be our target. Pretty much we're on this level here. Alright, so let's see if we entered there, we're shooting for that target. This would probably scare me, as I told you before, and if you took profit there, it wouldn't bother me if you took profit there, but because you still have a lot of issues with this market moving to the downside. Alright, and the only way I would, if I would not take profit, is if I was trading more than one lot. So you can't be trading with just one lot and expect, you would definitely be worried here, because you see the market failing to get through that point. So I probably would, trading with one lot, probably would have taken that little bit of profit there, or whatever, however much profit that was. This is a daily time frame, so it's a decent little bit of profit. But then if you're trading with more than one lot, you definitely have to take this as one target level and then go for your 1-to-1 ratio, which is your end value, your Ichimoku end value, right? This is our end value. Now we have other values again. We're going to have an E value and a V value and an NT value. NT value we're not going to worry so much for, but NT value is going to be close to this area. Based off of just looking at this really quickly, this could be pretty much an NT value. All right. The way I would calculate my NT value is from this point to here, and then I would add it up to this point, and that would give me around that area somewhere for my NT value. But I'm not going to get into that right now because I don't want to explain all these values and then have people confused. I take one thing at a time. So looking at that end value right at the 100% level, let's see if we could get there. Okay, so let's see if we could get to our target. And see, you would have started to get worried there because the market pulled back here. And then the market shot down, pretty much hit our target. All right. And then it pretty much hit our target again, and then it went through our target. And now it'll be searching for our next level. And I'm not sure if we would have hit it. It looks like it would have been close to our next level. So we probably hit all three levels of our Ichimoku analysis. And you could see what happened here. So pay attention to other things too with Ichimoku. You don't want to get lost and blind on just certain things that we talk about, because you want to pay attention to everything that we have to our value and to our use with Ichimoku, right? So you want to look at this Chiku span. Chiku span had an issue getting through this level, right? People will tell me, well, that's price, blah, blah, blah. Yes, it is price, okay? But it's off of this support level, which is going to be your flat cloud here. And Chiku span needs to get through that level because that's an aspect of price. It didn't get through that level and it pulled back, and you can see where that happened with price. And people will tell, well, that's just price doing that. Yes, it is price just doing that, and it's honoring this level here. All right. So in order for me to see that, basically I would have to do this. I can see it easy with Chiku span. There's nothing I have to do. All right. And when you're trading, sometimes you don't get focused on certain things that you may miss. So if you're not putting your lines all the time, you're not going to notice this. But if you don't have that flat line there, you're not going to notice that support level. But if you see Chiku span hit there, you notice that support level. All right. So that's why when you look at this, it is going to be telling you also what price is doing at that time. All right. So those that don't really understand the concept of Ichimoku and Chiku span and time and wave and all that really don't understand everything that I'm saying and understand how I'm trading it to the maximum. All right. But this is just part of what we have and what we do. So basically, guys, what you could do, if you're really interested in learning more about this and learning more than just the basic Ichimoku that you see everybody trading, with the 5 lines and its TK crossovers and the Kumo breakouts, and you want to learn more how to calculate where price targets are, how to calculate where the market's going to turn, when to put your calculations together, because see, if we had this calculation based off of time value, we would definitely have more strength. And then also to enter the market based off of a time value and your wave observation value and your time observation value along with your price observation, we would definitely have more strength to enter the market and have more of a reason to enter the market, and you would start to see these patterns develop more because you're going to start paying attention to those things. Right now you probably don't focus on those things, and you don't even know some of these things probably based off of our time analysis and our price analysis and stuff like that. So if you really want to learn more, guys, just go to my site, www.fxatOneglance.com. When you get there, click on become a member, and right now I'm offering a lifetime membership. Okay, so what I'm offering is a lifetime membership. Let me show you real quick. That's what I am offering. That lifetime membership for a $250 one-time fee will get you all of my courses. My basic course, which covers a whole bunch of trading with Ichimoku, which would be trading with fractals, trading with support and resistance, supply and demand, price action, divergence, Heikin-Ashi candles, and so forth. There's 12 parts of that course, okay? And then I have my price action course. You get access to that, all right? And then I have my Ichimoku Advanced course, which will teach you all of the things I'm talking about and more, which would be our time, price, and value, all right? So that you would be able to learn the whole concept of Ichimoku and not just the basic Ichimoku that you see everybody trading right now. So if you're interested in that, just go to fxatOneglance.com, click on become a member, and you could get that for a one-time fee at this time. I will not have that going on forever, so you can take advantage of it while we have it. All right, so guys, hopefully this helped you out. Even if you don't become a member, you could still do these same things that I just was talking about, so basically, and still become profitable, find targets, and be able to do that, because the market likes to hit that 1-to-1 ratio a lot of times. All right, and I talk about that all the time and with the traders that are in our community. So that 1-to-1, you probably never knew it. If you did know about the 1-to-1 ratio, you never probably knew that was a Ichimoku N-wave value. But yep, that's what it is. All right. So guys, if you're interested, come check us out. Like I said, we have the courses, we have a chat room, we have our forum, we have weekly and daily webinars depending on what's going on, what the market's doing. We'll hold webinars, and you'll be able to just learn a whole bunch more. All right. All right, guys, I'm done. Hopefully this helped you out. And until next time, guys, have a great one. God bless. So long.